Alright, I'm not wasting no time. This is the only 9:30 a.m. video you're ever gonna need in order to take beautiful trades like this one that helped me make a 2.9 RR trade yesterday. Helped me take pretty much the same exact beautiful 2.75 RR trade. Now, what am I gonna be talking about today? I'm talking about the power of 3, AMD accumulation, manipulation, distribution. This happens almost every single day at 9:30 when market opens, and I'm going to explain to you how exactly you can spot it, what to look for, and how to take an entry off of it. So without further ado, let's get it started. So the first thing you want to do, and this is based off of your guys' strategy, is mark out key levels. What I like to do, I like to mark out higher time frame fair value gaps, draws in liquidity, new day opening gaps, new week opening gaps, anything that has a level of resistance or something that we can target. Okay, now once you've done that, what do? It's as simple as this. We wait for 9:30. 9:30, the New York Stock Exchange opens and we get a shit ton of orders. And listen very carefully. The first leg of movement that we get is the manipulation leg of price. Price is manipulating orders in order to get people to think price is going to go in a certain direction and eventually reverse. Perfect example today. And listen, the reason why it's called AMD, accumulation, manipulation, distribution, is the stages that it goes by. The first stage is accumulation. What do we see? An accumulation of orders right before 9:30 in a good time frame. Doesn't have to be like the entire night before as accumulating orders, just a decent amount before. We see price accumulate, not be too volatile, and that's what we want to look for in the accumulation phase. So next thing we can see here is that we have these 8:30 data highs. Let me mark out. And alongside with that, we just have a lot of high resting highs that can be used for buy side liquidity, for our liquidities that we look for a liquidity sweep. So we can easily come here, mark all of them out, beautiful highs that have just not been taken yet, as well as a nice 1 hour for value gap that's here. It's not marked out, but it's there. So what happens at 9:30? We open and we rip. So the reason why it's called the manipulation leg, as I just said, is because we manipulate people into thinking price is going to go to a certain direction and then reverse. So whatever direction price manipulates towards, we're going to typically be looking for trades in the opposite direction. So when 9:30 rips up, takes out draws to the upside, at 9:30, that leg of, that leg of manipulation, it will typically turn into an eventual reversal. We had a beautiful example today. 9:30 open, ripped, started taking out our draws of liquidity beautifully in that that 10 a.m. time frame, and 10 a.m. came, that new hourly candle created that reversal. So that was our second stage, the manipulation. We'll write it out so it's simple for you guys to see. So here we have the accumulation of orders, right? We'll lower the font a little bit like that. This is the accumulation. It's the second stage, manipulation, where we start taking out draws and liquidity in one direction that we're going to potentially look for to catch a reversal. So this is stage 2. Write this down. Manipulation. Now, distribution is the next step, and it's pretty evident. It's what it sounds. Price is distributing in the opposite direction of which the draws were taken. Because obviously, if we're taking out buy side, we have all these orders, and we're probably going to go down and take out sell side. And what lined up perfectly today was that at 9:30, we did not have a low. And to see a 9:30 market open not have a low is pretty rare, or eventually not trade back to it is pretty rare, which is, like I said, if it doesn't make it at the 9:30 market open, it's most likely going to go and make a low for it, for that 15-minute candle, 30-minute candle, 4-hour candle, whatever it is. Go make that new low, just to have it. That's how price works. Okay, now the distribution leg, what led us to catch this pretty much 3 RR trade. Now, how do you know when to enter for the distribution leg? Well, you look for bearish confluences, but after a certain time frame. Typically after 9:45 is when you want for most of the manipulation leg is going to be happening pre 9:45. Now, once you start getting into the macros like 9:50, 10:10, even 10 a.m., the new hourly candle, that's when we start to anticipate the reversal, because most of the stuff, like I said, most of the stuff that happens before is going to be manipulation. Now, what was perfect here? Like you may say, all over here, fair value gap, we see, well, it manipulated, turtle soup of that high beautifully. If you don't know what a turtle soup is, don't worry about it. I'll make a video about it, but it's not super important to what we're talking about. Boom. Liquidity sweep, inverse fair value gap, perfect. I'm going to short right here. No, this setup will fail almost every single time. Why? Because we are not at that 9:45, 9:50 macro reversal time frame yet. It is only 9:35, so we are probably still going to want to manipulate price a little bit longer. So what do we do next? We stay patient. Next thing you know, another draw of buy side liquidity gets taken out. Awesome. What do we have here? A fair value gap. Well, this is after the 9:45 time frame. Still a little bit early, but we can look to take shorts here, especially after we absolutely beautifully turtle soup that high. However, this fair value gap here does not get inversed properly. We do not get a close below it. We don't even start to push below the candle that, the middle candle of the fair value gap. So that is not a valid entry. Maybe if we had to, push down even further, started a low resistance liquidity run, possibly we could have entered there. But for now, we fade it. What happens next? Another swing. Now, what can we anticipate at the new hourly candle? 10-10 macro, we can anticipate potentially a reversal, especially after we have a nice leg of up candles here that we can look for another inverse fair value gap play, or even an institutional order flow entry drill, which is just a 1 minute fair value gap fill, and then an expansion in whatever direction that is. So now that we can continue to look, we see, we get our break of structure, and there's only one 1 minute fair value gap, and the 1 minute fair value gaps have been holding really well this session. So what should we look for if we want to anticipate a reversal? A 1 minute fair value gap that probably gets disrespected. So, and to play this extra conservative, I even waited for this next candle to open and the bodies of this low to push past. We get that 1 minute inverse. Next candle doesn't really go anywhere, which is why I don't enter. I hesitate. Next candle opens. We start pushing below the bodies. I enter. Semi-stop at the top of this 2 minute fair value gap that opened right here. Boom. Semi-stop there. And then I can aim to target the 930 low that doesn't have a wick. And what happens? It plays out beautiful. I was able to short here, take a partial at the 5 minute gap, and then I was trailing my stop to try to make more profits for the day, but we ended up getting we got stopped out deep in profit. So we still made a good amount on that day. So that is literally how simple it is to see an accumulation, manipulation, distribution leg on the charts at 9:30. And this happens almost every single day, and I'm going to show you guys another example, which was yesterday's price action, pretty much the same exact trade. What do we have here? We have a low, we can see a high, we can see another high, and actually we have a area of resistance here. I forgot what it was. I can't exactly mark it out right now. We're just going to talk about it in a second. So what do we have here? Post 9:30, what do we see? We see an accumulation level, a level of accumulation of orders before 9:30. Which is what we want to see. If we have a swing low, swing high, and we're just accumulating in between those, we don't really want to see anything get taken before market open. We did take out this low at 9:29, but it's okay. It doesn't really matter that much. So what now? We accumulate. Market opens, we take this low out. And what do we do right after? We start ripping up in the other direction extremely quickly. Now, the one thing that I want to note is that we have this very strong 5 minute fair value gap right here. How do we know it's strong? Why? Because it went into it once, failed to push past, went into it, another 5 minute gap, another 5 minute candle, went into it, went down, went into it, went down. All of the bodies of these candles here from 8:40 to not pretty much market open for almost an hour, we were pushing into this very strong 5 minute gap and even rejecting to get a body close, even a tick into it. So we know that this 5 minute fair value gap is a very strong player in determining where price will want to go. So we scale down to the 1 minute. We can see we had the accumulation phase. Jesus, I cannot type. Accumulation. Second stage, manipulation. Now you may be, excuse me, you may be saying, Oliver, wouldn't this technically be the manipulation leg? Yes, it is a manipulation leg. I'm not going to sit here and act like this leg down that we had at 9:30 isn't a manipulation candle. However, we had distributed way too quickly to the upside and it would catch shorts. And there was no shorts entry, right? We have a big expansion here. We inverse that 5 minute, and you could have taken that 5 minute. If you had 5 minute candle right there, 9:35 open, you long that, you place your stop at the low. You could even take a negative RR trade, to this. And the reason why I didn't take this is one, because it's really negative RR. And second of all, we had other draws in liquidity, and my overall bias for the day was bearish considering how much we had, slowly expanded overnight. So already following my bearish bias, we can look at our accumulation phase, manipulation, which was manipulating this high, and we perfectly turtle soup this high. And a lot of people did not take this short. We're hesitant about it because we started pushing down, but we didn't take out London high. And the reason why it was okay to take the trade, it was still valid, is because we had a zone of resistance at this level. We could see it went, traded into it, failed, traded back into it, pushed down, traded back into it, pushed down, traded back into it, pushed down. And perfectly we can see here, as soon as we got that turtle soup entry, which is absolutely beautiful, first 1 minute fair value gap literally presented itself right there. Puff. We wait for the fill, body close below it, and we push past the low of the third candle, the fair value gap, you can literally, I had set my stop at the bodies of this high just to be safer, a little bit more conservative play. I mean, a little more regular play in my opinion than, you know, trailing your stop super aggressively here. But what did I do? Place my stop there, buff, enter, target the 930 low that was created here, as well as possibly this draw, just paying attention to other draws that could get taken, you know, and potentially cause reversal or slow price down. But mainly I wanted to see this low get taken, as this was my main sell side liquidity. What happens? We distribute absolutely perfectly. We get that 1 minute fill for confirmation. We push down, extra confirmation, puff. We go that the moment we took out, you know, this low right here, we start taking out these lows with speed. I'm trailing my stop loss. I'm not dragging it to break even. You don't drag your stop loss to break even. There's no reason to do that unless, you know, that's where a level where price should not trade back to. I'm going to talk about stop losses in another video, how important it is to trail them statistically and not just trail them emotionally to break even just because you don't want to lose money. So how would I have trailed my stop loss in position? Boom. We break this low right here, drag it to the high left for value gap. Break this low, drag it to this big candle here before we had this big expansion down, because we don't want to see price trade up here, especially we have this 1 minute gap, another like not no gap, but we have 1 minute gap here. Give it a little bit more breathing room, and we're already pretty much break even on that trade, so it's good to put that at the high of that candle. What do we do after once we finally start pushing down below this low? Dragging myself aggressively to this high right here after we had partialed there, and you leave a runner to go hit full TP, and what does it do? It absolutely smacks full TP. Matter of fact, it smacked it right there. And we took those, excuse me, we took this low absolutely perfectly. So what can we identify here? We have pre-930, market open, accumulation, boom. What do we do next until that macro time frame? Manipulation. Okay, manipulation leg. Then we look for bearish confluence to the downside to anticipate a reversal, like an inverse fair value gap, an IO Fed like I took here, higher time frame inverse play, whatever it may be for you, you do that. Next thing you know, buff. What is this trade? The distribution of price to these lows. Okay, perfect. That led us to take an amazing 2.8 RR trade, and that is how I absolutely banged almost 3 RR trades 2 days in a row, and how this happens pretty much almost every single day. Now, August has been a pretty ugly month, I'm not gonna lie, but because we've had these 2 absolutely clean days of price action where we see this normally happen, because this has been happening all year, just this August and a little bit of July price has been super choppy, especially with news, you know, wars, all this stuff that's going on. So I wouldn't worry about it too much right now if this isn't playing out super cleanly, especially in this kind of, you know, time frame that we're in. For how price is moving, it's a lot better to go for lower RR trades, cut your risk a little bit, wait for price to clean up and actually have some good amount of movement and good amount of, you know, certain direction on like a week, 2 weeks, then go back to normal risk, go back to your normal RR and start trading again from there. But that is absolutely beautiful in my opinion. You know, literally the only 930 setup you're ever going to need is just accumulation of orders, manipulation of a high or a low, then distribution to the other draws in the opposite direction. Same thing we can see here. Beautiful. Price accumulated before 930. We left these lows. Buff 930 open, didn't even make a low, so that's already a beautiful key level that's given to us right there. We accumulate. What does price do until that 10 a.m. time frame? Macro buff. It manipulates. Then what do? Look for bearish confluences to the downside in the proper time frame. Then we get that distribution like all the way down to the draws in liquidity. It is that simple, guys. That is the only thing you need for 930. Don't go complicate it. Don't go do bullshit. Go back test it yourself. Don't take my word for it. Go back test it. Go see you know how it's working for you. If it's working for your strategy. If not, then don't do it. Do something else that works for you. But find something that works for you. And in my opinion, price using the power of 3 has been so unbelievably effective, and it just made me so much money in the market. It's unbelievable. So that is about it. That is the only 930 setup you need. Thank you guys for watching, and I'll catch you on the next one. Make sure you use code BEN on all prop firms and code Ollie on Trader Waves for the best trading free trading journal out there. That's all I have for you. Wanted to make it simple, wanted to make it effective just so you guys can learn, because I had some people in chat today after we took this trade. Can you please make a video explaining to me how this strategy works? I'm on it. Let's get it. I'll see you guys in the next one. Peace.